Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Take it over. President Trump proposes the U.S. take ownership of the Gaza Strip, potentially deploying troops and moving Palestinians out.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site.
Israeli Prime Minister Benjamin Netanyahu labels Trump's idea different, while Saudi Arabia says it won't establish ties with Israel without a Palestinian state. Plus, Alphabet and AMD shares slide in extended trade after missing estimates, pulling futures lower as China reopens to the first salvos of a new trade war with the U.S. Well, it has just gone 8 a.m. across the Emirates. I'm Joanna Bersachi, back in Dubai today after my trip to Istanbul. We will be playing some of our conversation with the Turkish Finance Minister, Mehmet Simsek, later on throughout this show. But of course, another day, another Trump headline. This time, we're going to be talking about the ramifications of his comments vis-a-vis Gaza and the U.S. supposedly looking to take control of the Strip and moving Palestinians away from the territory into neighboring countries. So huge bombshell announcement out of President Trump yesterday. We will talk through the ramifications. But as ever, we're going to kick off the show talking about markets. The reaction overnight. Here you can see futures are dipping towards the red. Some after hours negative price action from AMD and Alphabet. Investors didn't really like the guidance that they gave for both AI and the data center cloud growth outlook. And so on the back of that, NASDAQ is slipping a little bit, though we still recovered a lot of ground from where we were on Monday on that tariff bombshell. 10-year yield sitting at 4.50, and again on Monday at some points we got up to 4.58, so we've come all the way back again to where we were. And of course, what's giving the market a bit of comfort here is the fact that the imposition of tariffs on Canada and Mexico have been delayed by a month. In China, that is not the case. U.S. dollar trading sideways, slipping a little bit, and again the price action over the last couple of days has been negative for the USD. But take a look at this other index that I want to flag to you. This is a Trump tariff losers index compiled by UBS. And look at the reaction that we had on Monday. Stark drop. And since then, of course, we have stabilized, whereas macro assets, so if you're talking about the USD or 10-year treasuries, we've come back almost where we were on Friday. But this specific basket hasn't fully recovered. And it does tell you that even though on a macro level, many assets are sort of shedding off some of the concerns that they had about the imposition of these tariffs, on a micro level, some sectors continue to get hit. And so this is what you're seeing in that chart there. But the other big news of the day is that China markets are now back from Lunar New Year. So let's get a check on how the reaction has been, Avril. I think everyone around the world was waiting to see how some of these Chinese indices would respond to all of the news that has hit in the past week. So walk us through it.
Yeah, a lot has happened since China's been on break for the past week or so. We've seen the DeepSeek narrative taking hold, a trade war erupting, and we started the day on the front foot on the mainland gauges, but then those gains quickly erupted with those tariff concerns overshadowing. Then we got economic weakness based on some of these services activity indicators as well. So slipping into negative territory on the mainland gauges. The outlier today is really the Chinese chip-making related shares, including the likes of SMIC, part of the DeepSeek narrative. SMIC, the A shares paying catch up to the surge in the 8 shares. Now, we're also seeing that mood being dragged down on the Hong Kong markets and the broader Asia Pacific. The gauge is pairing gains from earlier. Worth keeping in mind that we've seen dollar China around the 728 level if you're looking offshore. Onshore, also weakness as we're back today, and that is despite a strong fix from the PBOC, that bit of pushback coming from the Chinese central bank. Jomana.
Yeah, I've got to say I'm pretty surprised to see how resilient Chinese markets are, given, again, the latest news flow. But that is the picture for now. Avril, thank you so much for giving us an overview of some of those key markets. Now, what could be a dramatic new U.S. intervention in the Middle East? President Trump has proposed taking over the Gaza Strip and assuming responsibility for reconstruction. He says that could turn the war-torn territory into the, quote, Riviera of the Middle East. The comments, which upend decades of foreign policy doctrine, were made during a White House news conference with the Israeli Prime Minister Benjamin Netanyahu. Trump also insisted Egypt and Jordan will take in Palestinians moved out of the Strip.
I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
He has a different idea, and I think it's worth paying attention to this. We're talking about it. He's exploring it with his people, with his staff. I think it's something that could change history, and it's worthwhile really pursuing this avenue.
Bombshell announcement. Joining us now is Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingston-Wallace. Well, do we know if there's a more elaborate plan behind what Trump announced yesterday, or is it just one of those things that he said on the fly?
I don't know if it was said on the fly. I mean, as we understand it, very few people knew he was going to say it before he said it. Not even clear if Bibi knew that it was coming. And, you know, he was reasonably diplomatic in his response, but it was hardly a full-throated support for the specific idea. I think it's too early to say whether it's going to go anywhere, because we've seen similar comments on Greenland, Panama, Canada. So I don't know if Gaza is intended to be the 54th state or whatever it is, but it clearly is going to be very, very problematic for so many different reasons, starting with where are you going to put them? Are you going to force them out, and how are you going to force them out? And how does that look internationally? How do you pay for it all? And then ultimately, okay, so the US takes it over, but what does that mean? Moving the military into Gaza? So it's a very expansionist statement. I think it's very problematic for the region. We'll see what the reaction is over the next couple of days, but it's interesting that at least some of the big power brokers in the region came out really fast to say absolutely
Well, I
not.
thought it was interesting. At 5 a.m. local time, the Saudi Foreign Ministry put out a statement condemning, well, not directly condemning, I would say, sort of going around it, but reiterating that there needs to be a path towards Palestinian statehood.
Yeah, and this is a long-held position. And by the way, it is a position that's been held for a very, very long time by successive US administrations. So it is in line with everything that's been discussed about this issue over many, many years, if not decades.
Yeah, and of course, the big goal for the Trump administration is to get to that Israeli-Saudi normalization. But putting out statements like this probably doesn't help push them in the right direction.
No, I'm not sure there's even that much support within Israel, frankly.
Yeah, okay. Stuart, thank you for the overview. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Let's continue the conversation now and bring in Adam Ramey, Associate Dean of Social Sciences and Associate Professor of Political Science at NYU Abu Dhabi. Good to have you with us on the show. Well, we've been saying about Trump, even as it pertains to tariffs, to take him seriously, not literally. In this case, should we be taking him literally?
Good morning. It's great to be here. And honestly, I don't think so. I think, look, at the end of the day, Trump is a maverick. That is one of his sort of key personality traits. It's led to some interesting out-of-the-box thinking, and I think that that's what we have right here. Trump is looking at the dire situation in Gaza. He sees if the Israelis move in, the settlers move back into Gaza, that would be catastrophic. If Hamas resurges in Gaza, that would be catastrophic. So Trump comes in with a kind of a wild proposal and says, okay, we'll do it. And frankly, he sounded more like Trump, the real estate developer, and less like Trump, the United States president. It's not entirely clear how exactly this would even work. Is he talking about creating it as an overseas territory? Is this just a temporary kind of occupation along the lines of a UN mandate or the League of Nations mandate after World War I? It's totally unclear, and even members of his own party, particularly those of the America First group that he is so proudly the champion of, would see this as an unnecessary foreign expenditure of American resources when the American people want things fixed at home. They want lower prices. They want a secure border and so on.
Yeah. But, you know, there is an issue of housing in the Gaza Strip right now. You've got 1.5 million, 2 million people, many of them returning back to northern Gaza and finding that their houses no longer exist. There's rubble everywhere. There's not a lot of access to medicine, to food. There are these images of children filtering through garbage to try to get access to food. So the situation on the ground really is dire. There has to be some form of a housing solution. Where is that going to come from, if not the U.S. then?
Well, I mean, so this is sort of interesting. So at the same time, in the course of the last week, Trump's political ally, Elon Musk, and his Doge have targeted USAID for essentially dismantling. And USAID was a major source of funding for global development around the world. And at the same time as that sort of dismantling of USAID is happening, we have President Trump talking about the United States assuming, ownership over, or it's not even clear what it would be, over Gaza. I do think, though, that, if we sort of take Trump's statements and sort of zoom out and think about what he really has in mind in his head and something practical that could go forward, is Trump could spearhead some sort of redevelopment campaign where the United States assumes the sort of the leadership role in rebuilding Gaza, and that would probably entail some sort of military policing by U.S. forces in the context of that to protect U.S. assets and personnel that are involved in the redeveloping of the territory. I think that is something that is realistically possible. Again, I don't know what the political appetite would that be for that in the United States, and particularly members of his own party. But I think that, Trump is certainly one thing he seems to see in this current situation is that the current political status quo isn't working, and he's throwing a dart at the dartboard, and we'll see if it hits.
Yeah. More short term, though, we're still in the midst of a very tenuous ceasefire agreement. The conversations are supposed to begin now vis-a-vis moving from phase 1 to phase 2 of the ceasefire. But again, many within Israel would like to see the prime minister restart the war once phase 1 is over. What do you see as the likelihood of this ceasefire actually successfully being able to move from a temporary ceasefire towards a more long-lasting one?
I think that certainly one thing about President Trump is that he doesn't like bad things happening under his watch. And I think a breakdown of the ceasefire here or a serious reignition of the conflict in Ukraine, obviously the conflict is ongoing, but if it were to heat up significantly, Trump doesn't like that. I think he views it as a blight on his record, and it's a distraction from his other priorities. So I think, one of his priorities in his meetings with Netanyahu is to impress on him the importance of sort of, keeping things as they are, not reigniting the conflict. I don't think that Trump sees any particular political value in doing that. So I think that the odds are pretty good of things holding. I mean, Netanyahu is in a precarious situation. He has a coalition that consists of a lot of different voices on the Israeli right, and some of them very extreme who are egging him on to keep the conflict going. And he has to make a decision about whether he cares more about preserving his own short-term political future or his long-term legacy. And it's a difficult decision, to be sure. But I think that him coming to Washington and Trump presenting his out-of-the-box idea for Gaza suggests to Netanyahu that the politics of old, at least as Trump sees them, is not something that at least today, that he sees as something that's viable to continue going forward. But again, it's a day-by-day situation, and we'll just have to wait and see how things materialize.
Yeah. Adam, great to have you on the show today. Thank you so much for providing your views and perspectives. Adam Ramey, Associate Dean of Social Sciences and Associate Professor of Political Science at NYU Abu Dhabi. Well, still ahead, we will get the market outlook with SGMC Capital as investors weigh escalating trade and geopolitical tensions and a raft of corporate earnings. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumana Bersachi in Dubai. Mainland Chinese stocks have declined as trading resumed after a week-long holiday, with traders weighing Trump's trade tussle with China and corporate earnings. Joining us now is Ed Gomes, CIO of SGMC Capital. Well, good to have you with us, Ed. I think everyone around the world was waiting to see the response in Chinese equity markets once they reopened for trade, given all of the noise and the shots being fired vis-a-vis tariffs. And I've got to say, I'm pretty surprised at how resilient Chinese markets are trading this morning. Shanghai Composite only down about 0.3%. Why do you think that's the case?
Well, I think the primary reason, Jemana, is the fact that over the last 3 years, Chinese assets, especially equity assets, have completely underperformed. There's no one left to sell anything, and on balance, it's a market which has lost volume, lost value traded. If you just compare the averages of what's getting traded today versus, say, 3 or 5 years ago, it's just a fraction. So there has been, over a period of time, and we've all seen what's played out over the last 3 years, with Chinese corporate names, there's just generally been a massive amount of selling, and now, there aren't too many people left to sell anymore. Having said that, clearly the story going forward can and will be different. The government, the central bank is doing whatever it needs and whatever it can to support growth, to support the markets now. So things will probably flatline. At the end of the day, we also need to factor in what happened with DeepSeek. China finally coming through and coming up with really good innovation in the AI space, in the large language model space, which gives people some amount of hope that they're happy, with the progress being made there as well. So it's not just the U.S., it's the U.S. and China, and you will see a bit coming from that perspective.
Yeah. Do you think that the main takeaway of the week is that the Trump administration don't really want to apply tariffs, but they're using it as a negotiating tool, and therefore the market doesn't have to take the threat as seriously?
Both yes and no. And just reverting back to your earlier guest who referred to Trump as a bit of a maverick, and clearly that is true. He likes to mix things up. I think behind the maverick, there's Trump the negotiator. He wants to do whatever he can for his interest, for the Republican Party's interest, for the country's interest. And to the extent that every interaction that he gets into is effectively some kind of negotiation. It's always better when you are in this negotiating stance to get your opponent or the other side to constantly second guess what's coming their way, especially when you have such a large, powerful negotiating position yourself, the U.S. in its might. So he's going to do, it's the equivalent of lobbing, mini hand grenades into the opponent's camp, and seeing how they respond, seeing how maybe it comes to nothing. Maybe he'll pick up this thread. These threads maybe a week later, a month later. But you're constantly getting your the people you're negotiating against to respond to your tactics, to your strategies, and to your pronouncements. It's going to be one long negotiating period for the next 4 years, and I have no doubt about that.
I mean, it must be just a really difficult time to be trading these markets. So much volatility, and then if you walked in on Monday and you put a trade on the Canadian dollar or the Mexican peso, playing for further weakness, you would have lost money by now because everything is back to where it was on Friday again. So, as an investor, how do you see through the potential volatility to come in terms of administration decision making?
Sure. So if you look at anyone who's got global capital, right, could move anywhere in the world. So you're in a global financial center, you could trade a market of your choice. You've got to get into markets and get into positions where you have strong underlying convictions that whatever comes at you, whether it's something that emanates from Trump, something that emanates from U.S., China, something that emanates, unfortunately, in terms of the news coming out of the Middle East as well. Whatever comes at you, the assets that you're holding, the positions that you have, are going to be invariant in terms of outcomes to those. And you have to do a lot deeper dive into everything that you're looking at. Our preference over most periods of time is to look at the tech industry because to the extent that these companies are delivering the future, delivering growth, delivering the innovation. Short-term moves, if you look at NVIDIA, it's down 25-30%, but we're pretty clear that NVIDIA will bounce back. The pace of development, the pace of innovation in a company like that is not going to stop anytime soon. So our approach is stick with surer bets, stick with bets that you've made and done a lot of homework on, and where the outlook is not going to change based on something coming through. Otherwise, it's a constant game of chasing your tail every morning, like you said.
Yeah, that's a good way to put it. Ed Gomes, thank you so much for joining our show today. Ed Gomes, CIO of SGMC Capital. Well, coming up, Turkey's finance minister says he has full confidence in the central bank to deliver on the country's ambitious inflation targets. Some of my interview with Mehmet Simsek next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Turkey's finance minister says he has full confidence in the central bank to deliver on the country's ambitious inflation targets. CPI did ease to 42% in January, even after a second straight monthly cut in the key one-week repo rate. I spoke with Mehmet Simsek at Bloomberg's Future of Finance event in Istanbul.
When you look at the policy mix, you essentially what you're seeing is a tight monetary policy, tighter fiscal policy, more supportive incomes policies. So I think this calls for meaningful disinflation. Now I know market sees our inflation targets as relatively ambitious. Here I'm referring to 21% for end year. But increasingly there is convergence between market expectations and our target band. So if you look at 12-month forward market inflation expectations, it's roughly about 25%. And if you look at our target band, it's close to that, the upper band of it. So I think we will deliver. I have full confidence in the team at the central bank. And we're doing everything we can on the fiscal side, considering, earthquake reconstruction and all other constraints. So I'm actually reasonably optimistic. I have to be, but also we have the right policies. We've deployed all the tools that are necessary to bring inflation down. So inflation will fall, but I understand the market skepticism, and we respect that. We have to deliver. Yeah. And delivery hopefully will help converge the expectations and realizations.
Well, that was part of my conversation with the Turkish finance minister, Mehmet Simsek, speaking to me in Istanbul yesterday about the Turkish economy and more. Well, coming up, President Trump says he will speak to Chinese President Xi Jinping at the appropriate time as the trade war escalates. More on the fallout next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Take it over. President Trump proposes the U.S. take ownership of the Gaza Strip, potentially deploying troops and moving Palestinians out. Israeli Prime Minister Benjamin Netanyahu labels Trump's idea different, while Saudi Arabia says it won't establish ties with Israel without a Palestinian state. Plus, Alphabet and AMD shares slide in extended trade after missing estimates, pulling futures lower as China reopens to the first salvos of a new trade war with the U.S. It has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. While tracking some of the market price action here, a negative session in futures. We have both the S&P and Nasdaq leaning towards the red, down 0.6% for the Nasdaq, digesting some of the earnings that came through after hours. AMD and Alphabet pulling down the tech space at this point of the session. So we're leaning towards the red into the open. 10-year yields, we've come a full, roundabout, I would say, since the beginning of the week. week. On Monday, at one point, we scaled up to very close to 4.6%. We're now back to where we were pretty much on Friday. This as the market comes to terms with all of the tariff announcements over the last couple of days, and with the fact that at least with Canada and Mexico, the decision has been postponed by another month. Not the case for China. We'll talk more about that in just a moment. The USD also slipping somewhat today, down about 3 basis points. But again, the theme of the last couple of days has been some of the steam coming out of the greenback. I do want to turn your attention, though, to the backdrop and U.S. fundamentals and the fact that with all of the noise that is coming out, the data actually has been quite strong. So Monday, we had a series of better than expected data come through as well. If you look at where the Atlanta Fed GDP tracking GDP indicator is right now, it's pointing to 3.8% growth for the U.S. economy. So really high numbers still coming through. And of course, that is important in the context of what the Fed may do, their own decision-making, with a little over 40 basis points of rate cuts priced in for the rest of this year. So something to bear in mind. But let's get back to these Chinese markets, back from New Year, from Lunar New Year, I should say. But Avril, the attention was going to be on the equity market reaction, but then also the yuan fixing. So what did we get out of the fixing today?
Absolutely. I mean, we saw stocks already taking a bit of a slide, and similarly, those declines in the Chinese currency. We've been focusing on the yuan fix today because traders wanted clues on how the PBOC is going to kind of deal with the depreciation pressures on the renminbi, at the same time brace for the impact from tariffs. Ultimately, it was a strong fix that we got, as has been the case recently. We see the fix below the 720 level. The problem is the messaging is kind of muddled because the fix takes a backward view. It's a reflection of where the yuan was before the long holiday. So flip the board, perhaps indicative in what the onshore currency is showing us today, and it's more or less playing catch down to the weakness in the offshore yuan that at one point in the past week actually weakened past the 737 level. So stock sliding, weakness in the currency as well today. Jumana.
Avril, thank you very much. Avril Hong in Singapore. Well, President Trump says he will speak to Chinese President Xi Jinping at the appropriate time after Beijing announced its response to U.S. tariffs. Our chief North Asia correspondent, Stephen Engel, is in Hong Kong with the latest. Maybe let's just start with the response that we got 24 hours ago. Actually, during the course of this show, China announced their own retaliation to the tariffs imposed by the U.S. What has the response been? Because from what I can tell, they haven't gone for like tariffs. What they've gone is perhaps for more a specific targeted approach in terms of retaliating to the U.S.
Yeah, I think that's a fair assumption as well, because the numbers just don't add up, and also the trade imbalance that it cannot do necessarily the volume of like for like. So the Trump administration is slapping that 10% across the board tariff on all Chinese products. The Chinese retaliating within seconds, as you rightfully said, about 24 hours ago. But again, not for like. It's about 80 different products and in specific targeted areas, in coal, in LNG as well. LNG, you know, the United States is the biggest exporter globally of that, and China accounts for 6% of those exports. So there will be, you know, a 15% tariff on that. They're also doing more than just like-for-like tariffs. They're doing export controls, which they have a lot of key minerals. In December, we saw a ban on exports of germanium, gallium, and other key minerals. Now these export controls have been expanded to tungsten-related materials, strategic materials that the United States does buy. So that is one area that they can hurt. Also, this antitrust probe into Google, it's highly symbolic. If you remember, it was, what, my goodness, 15 years ago in 2010 when Google had that high-profile pullout of China on ethical or immoral reasons. So they're not even in China, but China's launching an antitrust probe. And then you have this unreliable entity list, a blacklist, if you will. PVH Group is the parent of Calvin Klein. They get 6% of global revenue from China, 16% of earnings as well. So that might hurt the Calvin Klein parent, PVH. And Illumina is a gene sequencing American company, gets about 8.5% of its its revenue from Greater China. So these are targeted measures by China. They need to look strong. It's a balance between looking strong, responding quickly, but not damaging their own economy, which is struggling right now.
Yeah. And people forget as well that these tariffs were in addition to the original tariffs that were already in place. So let me just park that point. Yesterday, there was rampant speculation that there was going to be a call between President Xi and President Trump. It looks as though it's not happening imminently, but it is likely to happen. What can we expect from that call? And would it necessarily involve a de-escalation of tensions between the two sides?
Yeah, I think neither side wants to look too eager to make the first move, right? There's a bit of a standoff here. Yes, the two leaders, Trump and Xi, talked on January 17th, 3 days before the inauguration. Perhaps, we don't know, we have to read into between the lines. Perhaps that's why Trump did not come out full guns blaring on day one as he threatened. Maybe they had some sort of gentleman's agreement. So that's why a lot of people are looking for this next phone call, but neither is saying when exactly is going to happen. And that's just throwing more uncertainty into the whole situation. What is likely to happen is this week at some point, because those Chinese retaliatory moves, they take in effect February 10th, so 5 days. So maybe there is room. And believe me, I've covered China a long time. China does not want this to get out of hand and spiral into a full-on blowout trade war. So they are willing to talk. Now, it just depends on how each side is going to come to those talks.
Yeah. Excellent reporting, Stephen. Thank you so much. Really good to have you break down the latest. Sure. Our chief North Asia correspondent, Stephen Engel, in Hong Kong. Well, the U.S. Postal Service is temporarily suspending acceptance of parcels mailed from China and Hong Kong. That is according to a statement on its website, which gave no reason for the move. The USPS says the flow of letters and flat packages from the region will not be impacted. Shares of Chinese e-commerce companies all fell on the news. So just another development in the trade war that's going on between U.S. and China. Let's get more with Deborah Elms, head of trade policy at Hinrich Foundation. So much to ask you, but maybe let's just start specifically with what's going on between U.S. and China. How do you read these latest developments? And just to follow on from what my colleague was saying, how likely is it that this tit for tat actually does grow into a full-blown trade war between the two sides?
I don't think you should discount the possibility that this will escalate. I mean, Trump has threatened 60% tariffs on China throughout most of the campaign, or up to 100%. He started this particular round with 10%, again, in addition to the existing tariffs. So for many products, it's at 35% extra tariffs as a result of Trump's actions. And it could certainly spiral upward from there. I think in addition to the tariff changes, we saw one other major adjustment that you were just highlighting, which is how we deal with what are called de minimis shipments, which are shipments below $800 US dollars. Those have been stopped from China and Hong Kong into the United States. They've been stopped because they need to have new tariffs paid on those products, and they need to have full customs paperwork. And the reason why the Postal Service appears to have stopped moving packages is because they're not yet equipped to manage the volume that you're about to get if all of those e-commerce packages moved into the Postal Service channel of distribution. And so there's a lot of changes taking place. There will be more next week if the U.S. and China don't resolve this and if China's retaliation goes into effect.
So here's a question for you. A couple of months ago, or actually it was probably just a few weeks ago, but the news flow has been so thick and fast, we were reporting that China recorded a $1 trillion trade surplus throughout 2024. I think that is a record high. So if the tariffs are working, why was China able to continue to record such massive surpluses?
Because the demand is there. I mean, because China still has a speed and a scale of delivering, especially manufactured goods, that is very hard to replicate elsewhere. And as a result of that, often the pricing out of China is lower than pricing elsewhere. And so firms are reluctant to give up on an existing trade lane that has been very lucrative and very successful. Even if the prices do go up out of China, there is not necessarily alternatives in the U.S. or alternatives elsewhere. And for Chinese firms, the U.S. market remains, again, a lucrative final destination for products. So I think you do see reduction in the amount of trade between China and the United States as it gets shuffled across the globe. And in fact, China's dependence on the U.S. as a final market has declined since the first Trump administration, but it has not gone to zero. And so I think what you're talking about here is marginal decreases overall in the volume of trade between the U.S. and China relative to their overall trade. But it remains an important distribution channel.
Yeah. Yeah, I mean, that at the end of the day, if they are producing cheaper goods, then efficient markets will just find the place where the goods are produced cheaply. Let me just ask you a broad question about the direction of travel for global trade. With all of these protectionist sentiments and talk about tariffs going up in all parts of the world, what does that mean for global trade and some of the indicators that are going to come through in the next couple of months? Are we likely to see a massive drop-off?
I think we're going to see disruption for sure. We're going to see readjustment as firms think harder about what they do, where they do, whatever it is that they're doing, and who their final customers are. I think you will find increasingly firms will start to look outside of the United States. Foreign firms will look outside of the United States because they will say the risk and uncertainty coming from the U.S. is so high that even if it is still lucrative for us to trade with the U.S., perhaps we should diversify at this point. So that kind of disruption and change will certainly have economic impact. It will have economic impact inside the United States as customers, which are not just consumers, but also businesses, struggle to find the same kind of products. We're only talking about trade and goods here, but the same kind of products that they had, a week ago. And I think there will be a fair amount of trade uncertainty going forward. I mean, this is an administration in the White House that views trade as a priority area, and where Donald Trump himself has decades of discussions and complaints about the way in which the United States has been interacting with the rest of the world. That's not going to go away anytime soon. Yeah.
Deborah, really great to hear your views today. Deborah Elms, Head of Trade Policy at Hinrich Foundation. Thank you very much. Well, coming up, De Beers, the world's most famous diamond company, is floundering as global demand slumps. But could India be the industry's saving grace? That is the subject of today's Big Take next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, time for your Bloomberg Big Take. De Beers, the world's most famous diamond company, is floundering. A global slump in demand is threatening to frustrate its owners' plans to sell what was once a titan of the industry. Crucially, there's little sign of a recovery in China to pre-pandemic levels. The CEO of De Beers says India is the one to watch.
So China's a really interesting case. I think across the luxury sector in China, demand has declined as Chinese economic growth has faltered somewhat. Yeah. Now, we see that as a rather longer-term issue. So the first thing we'll see is stabilization of Chinese demand, which is coming through at the moment. That's an important platform to build on. But quite honestly, we see the regrowth of Chinese demand being a rather longer-term story. The good news is that India has taken over where China was, and India is now the second largest market in the world for diamonds, and that's growing at double-digit rate.
Well, joining me now is Bloomberg's Andiro Ganga. So interesting to hear what De Beers CEO had to say, given everything that's been going on in the diamond market. But Andiro, there we were playing a little bit of tape around the demand signals. But from what I understand, and I'm not a diamond expert here, is one of the reasons why the diamond market has been slumping is because of the emergence of lab-grown diamonds. There's more competition on the supply side.
Hi, Jumana. Absolutely. So sales for De Beers have been mad with a lot of tension because, one, there have been prolonged crashes in the market that have led to a crippling effect in the prices of diamonds that De Beers can be able to fetch from the market. And this has not only infuriated but also alienated most of their buyers. If you look at their market prices, they've been extremely higher in comparison to other market players, and that has sidelined them even further. In November, some of their principals landed in Gaborone, and they found that the prices of their stones was 25% above market value. And in December, when De Beers budged and decided to cut prices by about 10 to 15%, it was too little too late, because their buyers refused to buy because the prices of De Beers were still higher than the secondary market. And so some of these challenges just speak to the broader challenges that the diamond industry is facing, one of them being lab-grown diamonds, like he spoke about, the other one being demand from China, and him speaking in that soundbite saying he's optimistic because India is coming up and might be able to fill the gap left by China. But again, a 50% slump in demand is a big shoe to fill.
Yeah, and Botswana is the diamond capital, or diamond country of the world. How is this shift expected to affect the country dynamics?
Jumana, in December, Bloomberg did a story reporting that the budget deficit for the current financial year is going to grow by about $1.4 billion, which is about 6.7% of the GDP, and this was attributed to a slump in diamond receipts. And the newly elected president, Duma Boko, admits that there's a problem and they need to diversify that economy because it accounts for 80% of the economy, but it's still unable to create jobs for the 2.5 million population. So they're likely to go into climate-smart agriculture, digital economy, expanding wildlife, and also adding value to their minerals and processing them locally.
So interesting. Bloomberg's Andira Ganga. I'm always up for a big take on diamonds. Definitely recommend reading that one on the terminal today. That was Andira Ganga in Kigali. Now, speaking of, Rwanda-backed rebels have declared a ceasefire in the Democratic Republic of Congo, bowing to international pressure to halt fighting. After taking the trading hub of Goma in eastern Congo last week, the M23 militia has pushed south in a conflict that has killed hundreds and risks a wider regional war. Meanwhile, a group of 64 organizations, mainly from the DRC, have sent a letter asking the EU to cancel a critical minerals partnership with Rwanda because of its support for the rebel group. Rwanda denies supporting the M23. The World Bank has raised its economic growth forecast for South Africa because of a sustained recovery in its energy and logistics sectors. The U.S.-based lender estimates that GDP will grow by 1.8% this year, more than its previous forecast of 1.3%. The bank cites improved infrastructure services and contained inflation, but warns South Africa will struggle to reduce poverty and unemployment. Coming up, we'll get the outlook for U.S. big tech following disappointing earnings reports from Google and AMD. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, U.S. big tech fell in late trade after Alphabet and AMD's quarterly figures and outlook disappointed investors. Our tech reporter, Annabelle Jewelers, joins us for more. Look at how these stocks are trading in the after hours, down almost 8%. Let's just start with Alphabet. Why was the market reaction so negative?
Yeah, well, that was sort of one of the interesting takeaways because there was a slight miss at the headline level, but the big focus really came down to the cloud division in particular, and this is really seen as the key growth driver as well for Alphabet's business moving forward. So you can see here those breakdown of the numbers, and as I said, cloud revenue, it was just a little bit short of what Wall Street's estimates had been at. So coming in at around $11.96 billion, the estimate had been for just under 12.2. So a drop there, and it certainly feeds into that broader concern that we're seeing, particularly after the announcement and all the shockwaves that were caused by the Chinese AI startup model DeepSeek, that perhaps there won't be such a need for big computing power cloud storage going forward. At the same time, of course, cloud revenue growth did continue to expand. Overall revenue still up 12% year on year, but generally that miss across the board, the cloud was the big issue, and the company as well signaling some very big capex plans for this year. And that's really a big question as well. They're saying they're going to spend around $75 billion. The estimate had been for around $58 billion. So a big change there. And really that key question, how much ROI are investors getting when they're putting really this much money into new sorts of infrastructure?
Yeah, I mean, it's incredible to me that a cloud business can still grow 30% and you can get such a disappointed reaction from the markets. A similar theme, I guess, playing out across AMD. The market didn't seem to like the revenue guidance that they gave.
Yeah, that's right. And concerns around their data business portion in particular. So the data center division, for instance, it came in at around $3.9 billion in revenue for the last quarter. The analyst estimate had been for around $4.1 billion instead. And so there's that concern broadly that the push that AMD is making into AI equipment in particular is starting to lose momentum. And again, it comes back to that bigger question around DeepSeek. If we're going to be seeing, or we have the capacity to see these smaller language models moving forward instead of large language models, again, do you have so much need for these types of products? But not a great outlook really from AMD, and also, as we said, Alphabet, quite big tumbles in late trade.
Yeah, that's one way to put it. Bloomberg tech reporter Annabelle Drewlers, thank you so much. Well, let's take a look at how some of the equity futures are shaping up as we get closer towards the European Open. The handover is actually negative today. S&P futures down 0.4%, NASDAQ down 0.5%, given what Annabelle was just telling us about AMD and Alphabet and how the market has reacted to that in after hours. Eurostoxx futures also pulling lower to the tune of 0.4%. And of course, over here in the region, we're keeping a close eye on all the developments from the bombshell announcement out of President Trump yesterday that they're considering taking over the Gaza Strip and administering some of the reconstruction that's taking place. So we'll talk more about that in the second hour of the show. I'm Ziemba Insights in Dubai. Stay with us as Jennifer Zabazaja joins me from Cape Town for the second hour. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Take it over. President Trump proposes the U.S. take ownership of the Gaza Strip, potentially deploying troops and moving Palestinians out.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site.
Israeli Prime Minister Benjamin Netanyahu labels Trump's idea different, while Saudi Arabia says it won't establish ties with Israel without a Palestinian state. Plus, Alphabet and AMD shares slide in extended trade after missing estimates, pulling futures lower as China reopens to the first salvos of a new trade war with the U.S. Good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Ziemba Insights in Dubai. Another major news day. This time, Jen, the focus is on Trump's comments vis-a-vis Gaza and potentially taking ownership of the Gaza Strip and pushing out Palestinians. So that's a big story we're following over here in the region.
Yeah, a very interesting comment describing it as different from Prime Minister Benjamin Netanyahu. I'm Jennifer Zabazaja in Cape Town, where it's just gone at past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, a lot of what we're seeing across the board with the rhetoric around geopolitical tensions, also factoring in here, I've been covering the African mining indaba, of course having an effect on commodities. We're going to talk about that a little bit later, but across assets really getting a lot of reaction to what we're hearing from the U.S. president.
Yeah, I mean, and don't forget, we started off the week with those comments around tariffs, but also the tweet directed at South Africa and land expropriation. Yeah. So I saw the video that you put up yesterday, Jennifer. Everyone should watch that on our Bloomberg TV channel. Jennifer did a little explainer about what the tweet actually entailed. But for now, let's move on to markets. Futures are slipping in trade overnight, despite the more resilient handover that we got from Asia Pacific with Chinese markets back online. But this is the picture. S&P down 0.4. NASDAQ down 0.5%. And after hours, we are seeing a negative reaction to AMD and Alphabet, their earnings and their guidance on the outlook. That was disappointing to the investment community. That is pulling down the NASDAQ this morning. 10-year yields flatlining around 4.5%. This has been a consistent support level for the 10-year U.S. Treasury. Remember, back on Monday, we got very close to 4.6, so we've come back again. And then the dollar is slipping. The theme for the last couple of days, at least yesterday, was weakness in the USD. So some of the knee-jerk tariff reaction has been priced out of the market in 10-year yields and in the USD. But flip the board over, not for other segments of the market. So if you look at a micro level, this is a basket that UBS put together of the Trump tariff losers, the specific sectors that will be targeted. And you can see from the reaction on Monday, it was pretty notable. So we dropped quite a lot on the tariff announcements to Canada and Mexico. And even though that decision has been postponed by 30 days, the basket hasn't fully recovered. So that tells you that, yes, at a macro level, some parts of the market have certainly brushed off some of those tariff concerns. But on a micro level, there's certainly a lot of areas that is still factoring in the possibility of prolonged tariffs. So something to bear in mind. Okay, let's go back to these markets in Asia. Big day because it is the return of Chinese markets after Lunar New Year. Avro, walk us through the price action.
Well, Chinese markets not just back from the long holiday, also back from the lunch break. This is the picture at the start of the afternoon session. Losses holding. Actually, all things considered, not that bad, given these concerns about tariffs, the poor economic backdrop. We got another big miss in the services activity indicator today. But that being said, if these losses hold, won't be surprising to see the national team kind of step in during the afternoon session. Some have also pointed out that when you look at the retaliatory action by China, it seems targeted, it seems narrow, so maybe leaving room for negotiation and a bit of optimism there. Also paying attention to what we're seeing in Japan markets, because so far the inflation outlook, that picture that has been looking strong, that's been fueling the yen bulls. The Nikkei has paired gains from earlier in the session, bucking the trend. The world's top automaker, Toyota, it upped its annual profit guidance, although it missed on the quarter. We're seeing it extending gains today on a day where tariff risks are still the big concern for markets.
Avro, thank you so much. That was Avro Hong in Singapore. Now turning to regional news. In what could be a dramatic new intervention in the Middle East, President Donald Trump has proposed the U.S. take over the Gaza Strip and assume responsibility for reconstructing the war-torn territory. The U.S. president says he envisions what he described to be the, quote, Riviera of the Middle East. The comments, which upend decades of foreign policy doctrine, were made during a press conference with Israeli Prime Minister Benjamin Netanyahu. Trump also insisted Egypt and Jordan should take in Palestinians from the Gaza Strip.
I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
He has a different idea, and I think it's worth paying attention to this. We're talking about it. He's exploring it with his people, with his staff. I think it's something that could change history, and it's worthwhile really pursuing this avenue.
Bloomberg's Dan Williams in Jerusalem joins me now. Dan, good to have you with us. It sounded as though even the Israeli Prime Minister Benjamin Netanyahu was surprised to hear those remarks come out of President Trump. How seriously should we be taking this major bombshell announcement out of the U.S.?
Good morning. Well, as with much of what this U.S. president says, it's often hard to tell whether his proposals are far-reaching, original, articulated, and whether they're a form of geopolitical trolling, basically meant to provoke potential partners, potential adversaries abroad into coming up with better ideas of their own, to basically galvanize the entire international system. Now, going back years, decades indeed, we've often heard Palestinians in the Gaza Strip advise, with some cause, that that piece of land could have been Singapore, Macau, Hong Kong, given its size, given its coastal position. Those were largely aspirational comments meant to prompt Palestinians into redirecting their efforts away from war toward peace, peaceful development. It would appear the president has taken the step further by seeing a potential U.S. stake in that piece of property, as he put it. And the big question is, to what extent Americans would want this? There is an unhappy history going back decades of well-intentioned U.S. interventions that went badly awry for the Americans, and to what extent Palestinians would, of course, want this. Any U.S. intervention would come face-to-face with the remaining fighters in the Gaza Strip, armed groups, some of them with rockets, remaining from this war with Israel, a 15-month war, which is now in a ceasefire. So it's very hard to know. The reactions have not been good from much of the Middle East, especially Saudi Arabia, which is the country, it's a powerhouse of the Middle East, and the United States would like to bring it into a peace pact with Israel as part of its foreign policy program. So for now, it would not appear to have been received well. Trump likes to think of himself, or he's often been described as someone who deals in constructive chaos. The question is whether this idea will end up as mere chaos.
Yeah, well, it's drawn sharp rebukes from Arab nations. Saudi Arabia, very notably at 5 in the morning local time, put out a statement saying and reiterating that they would like to see a path forward to Palestinian statehood. And in the absence of that, they're not going to reestablish or establish ties with Israel. So a very strongly worded statement being put out from Saudi Arabia. But Dan, let me just bring it back to the near-term future, and that is the ongoing ceasefire. We thought that there would be some discussions taking place this week around moving from phase 1 of the ceasefire to phase 2 of the ceasefire. How likely is it in reality that there's going to be success on that front and that this temporary ceasefire can actually move towards a long-lasting ceasefire, even beyond talking about the reconstruction and the U.S. latest proposal?
Well, I think that's an excellent question, because not only would it be important for the fate of remaining hostages in the Gaza Strip, for those Palestinian prisoners in Israeli jails that Palestinians want to see going free, for the prospect of the ceasefire continuing at least for a number of days, it's also a bellwether as to whether Hamas, at least, as to Qatar and Egypt, the countries mediating the ceasefire, think it's worth continuing, given this extraordinary proposal made by Trump in the White House just hours ago. What we know so far is the Israelis yesterday said they would be sending a working team to Qatar. Again, Qatar has been mediating this deal. It has an operations room for the TikTok, for the tactical operational elements of this deal. They will be going there this weekend. And on Saturday, we're due to see the next batch of releases. So if those continue, it would appear that at least on a local level, all sides are trying to keep things moving along while they work out where things stand long-term, big picture, given what the U.S. president appears now to be favoring.
Bloomberg's Dan Williams in Jerusalem, thank you so much for breaking it down for us. And again, a fast-moving story.
Now, let's turn back to the U.S. President Trump says he'll speak to Chinese President Xi Jinping at the appropriate time as the trade war between the two nations escalates. Our chief North Asia correspondent, Stephen Engel, is in Hong Kong with the latest. Stephen, so many analysts are assessing this and saying that China's retaliation looks a bit restrained so far, even if you look at how the markets are reacting. How would you assess what we're seeing right now?
Well, I agree with what Larry Hu of Macquarie, he's the head of China economics there. He eventually says, essentially says that it's not in China's interest to have a full-blown trade war. And that's why perhaps their response was, as some have described, fairly muted. Look, they can't respond like for like on the trade front, but they can do export controls. They have added that. They've added some key materials related to tungsten. They've added a couple of more companies to the blacklist, the entities list, so-called. 10% tariff on agricultural machinery like tractors, 15% on LNG. China buys about 6% of China's exports of LNG, which is the world's biggest exporter of that gas. So there are targeted areas where China is focusing in retaliation. And it was very calculated because it came out within seconds of that deadline passing yesterday, about 24 hours ago, for those 10% tariffs from the Trump administration on China. It's in their interest, a lot of the people I've spoken to, China's interest, to keep this in check. And that's why it's quite interesting that neither side, neither Donald Trump or Xi Jinping, are showing, at least publicly, that they're eager to get on the phone and talk anytime soon. You would think that they would want to get on the phone, at least the Chinese would probably want to get on the phone and broker some sort of respite like Mexico and Canada did, but neither wants to show any signs of weakness in making that first move.
So, Stephen, I mean, we were talking about how that many people are returning from the Lunar New Year holiday. What is next? What should we expect next? Is the mood going to continue to be muted going forward?
Yes, it's going to be a bit muted until there's a phone call, right, between the two, and whether they can hash out some sort of agreement, a gentleman's agreement, like we could probably call that phone call that they had before his inauguration on January 17th, when we were expecting on day one, when Donald Trump talked about tariffs against Mexico and Canada, possibly the EU, but fairly limited on the China front. You remember on the campaign trail, he talked about upwards of 60, even higher % tariffs on Chinese exports to the United States, came out at 10 right now. And many people say, well, China pretty much got off easy at this point. They don't want it to escalate. But the focus, and again, I go back to the comments from Larry Hu from Macquarie. He says, because they just had this 10% tariff, they want to limit it. They don't want it to go much further. But to remedy that, they need to turn to domestic stimulus. And that's why 1 month from today, and I'll be there in Beijing, is the beginning of the annual session of Parliament, the National People's Congress. And people are circling that on their calendars as a time when the Chinese legislature, Chinese policymakers will come up with their targeted policy response to boost domestic consumption and the Chinese economy in the face of that export threat of 10% tariffs.
Fascinating. Well, we'll definitely circle back to you being there. It's always great to speak with you. That is Bloomberg's Chief North Asia correspondent, Stephen Engel, in Hong Kong for us with the latest. Now, still ahead, we'll get the market outlook with Ecognosis Advisory as investors weigh escalating trade tensions and a raft of corporate earnings. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. Now, mainland Chinese stocks have declined as trading resumed after a week-long holiday, with investors weighing President Trump's trade spat with China. Joining us now is Andrew Freris, the CEO of Ecognosis Advisory. So, Andrew, many people have been waiting for China to come back online and really react to some of these tariffs and the rhetoric, really, that we're seeing. I wonder, how are you interpreting the moves, at least initially, in the asset prices, especially when we look to Asia, about the current stimulus, about the current trade tariffs?
You know, I'm absolutely obsessed with quantifying things. China exports about 18% of all its goods to the United States. The tariffs, 10%, okay, which is flat across, attacks 18% of its exports to the United States. Well, the other 82% of exports don't go to the United States. Why this obsession with the United States? Okay, so they put 10%. Thanks very much. If I could advise, or if I was in a position of Chinese importance, I would say thanks very much for your email, noted, and I will put it on page 17, bottom right-hand side. Ignore it. Completely ignore it. And get on with the other 82%, which is much, much more important than the 14. And also, of course, the other 82% is involving all the other countries that are also trading with China. On average, if I was to take the OECD, on average, okay, about 20% of all exports go to China. The other 80 don't. It's as simple as that, except Canada and Mexico, where they are exporting something like 70% plus. But they are very special cases, Canada and Mexico. And also, they have been absolved. So the world now is obsessing about 20%. I much prefer to obsess about 80%.
So then what does that mean for an investment perspective? I mean, do you anticipate we're going to continue to see at least Chinese equities for the most part muted until we get a little bit more clarity moving forward?
Well, precisely because I'm not interested on the 18, but on the 80. And also I'm much more interested on what the Fed is going to do. This has completely been forgotten. Okay, now we are looking forward to labor numbers. No, I'm still obsessed with inflation. Inflation is not anywhere near at and below 2%. And why it is not, very likely the Fed won't cut interests. And that is much, much more important for the equity markets rather than what is going to happen if 18% of our exports are hit by a 10% tariff. Please.
So then if you're much more focused on, go ahead.
But so effectively, looking forward, I don't think the Fed is going to cut till about the end of the first half of this year, which means that the equity markets cannot look forward to being supported, in inverted commas, or receive another little boost, except, of course, that Trump now is going to come up with some more tax cuts. And if it comes up with some more tax cuts, immediately, of course, this is going to mean that the fiscal deficit is going to increase and is going to impact interest rates. So for me, the Fed, whether we like it or not, it's much more important whether Greenland becomes the 51st state or Gaza becomes the Riviera under the auspices of the United States. Oh, you know, stuff that it is actually pragmatic.
But I mean, but that's a little bit hard to say, right, Andrew? Because a lot of this stuff is affecting the markets. Because I know you're saying your focus isn't necessarily on these percentages, but there is a lot of focus on what it could mean for inflation, right? And so if that is your focus, where do you see inflation, at least from a global perspective, moving if we do continue to get these announcements from President Trump, realistic or not?
It's not a global perspective. You know, where I attribute enormous importance on the United States, it's not what Trump says, it's what the Fed is likely to do. And the Fed still has not said that we hit the 2% inflation, looks steady, looks as declining, and therefore we'll move on from that. It hasn't. And I don't think it's going to do. So I advise my clients, if you are feeling bullish or bearish about the equity markets, please, can you just switch off a little bit away of what is happening with the 18% of our exports and concentrate on what's happening to the actual economy, concentrate on the fact that a simple little jump on the artificial intelligence knocked Nvidia out for nearly $500 billion. I mean, this kind of really quantitatively important parts, as opposed to the trivia, I emphasize that, to the trivia of the obsession of what is not happening to our 80%. I know they are preoccupied by that. I'm not going to say you shouldn't worry about that. All I'm saying is one should worry about things that are quantifiable. And if they're not quantifiable, let's say work on the basis of small steps of ideas, look at sectorial ideas. And for example, you know, I'm going to be punished for that. Look at the beautiful behavior, the fantastic performance of the defense industries, both in the United States, European Union, and Asia. But oh boy, is that a politically correct thing to say? But there you are. If you're telling me what I'm telling my clients to buy is defense. Because even the end, the Ukrainian war and the Gaza war is not going to stop at all the huge rearming of both Europe and Asia. That's real.
Right. Yeah, that's right. Andrew, unfortunately, we have to leave it there, but really do appreciate your insights, especially taking us global and looking into the global picture. That's Andrew Freris, the CEO of Ecognosis Advisory, joining us there. Now, coming up, Panama looks to navigate a simmering row with President Donald Trump. We'll bring you the latest on the Panama Canal next. This is Bloomberg. Bloomberg Bloomberg has learned that Panama is weighing a possible cancellation of its contract with Hong Kong's Hutchinson Ports, a potential concession to defuse President Trump's threats over the waterway. The firm operates 2 of the 5 ports near the Panama Canal, but sources stress no official decision has been made. The U.S. president has accused China of having too much control over the canal. Also, the U.S. Postal Service is temporarily suspending acceptance of parcels posted from China and Hong Kong. The operator hasn't explained the move, but it comes after President Trump revoked a so-called de minimis rule for China, which allowed small packages under $800 to enter the U.S. duty-free.
Well, just another development on the trade front, on the tariff front, as you were just talking about, Jen, with the U.S. Postal Service now also getting hit. The S&P futures, NASDAQ leaning lower, down 0.5%. Euro Stoxx futures also leaning towards the red. In a moment, we'll pick up more of that story and the regional developments out of the Middle East. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. Take it over. President Trump proposes the U.S. take ownership of the Gaza Strip, potentially deploying troops and moving Palestinians out. Israeli Prime Minister Benjamin Netanyahu labels Trump's idea, quote, different, while Saudi Arabia says it won't establish ties with Israel without a Palestinian state. Plus, Alphabet and AMD shares slide in extended trade after missing estimates, pulling futures lower as China reopens to the first salvos of a new trade war with the U.S. It has just gone at 7:30 a.m. in South Africa. I am Jennifer Zabasaja in Cape Town.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa. Yet another very busy news day. And of course, the source of all of that news continues to be President Trump, this time with his shocking bombshell announcement plans to potentially take over ownership of the Gaza Strip. So that's what we're contending with over here in the region today, Jen.
Yeah, very interesting to see how that develops and a lot of the reaction that we'll get from that. But can't forget, as we were just mentioning there still are some companies reporting earnings. Of course, that is what the markets are reacting to, as well as China being back from the long extended holiday. So let's just take a look at where markets are positioned ahead of the trading day. We mentioned that we're seeing at least U.S. equities sliding ever so slightly after those disappointing results that we got on Tuesday, excuse me, from the likes of Alphabet. In particular, what we're seeing with the NASDAQ down more than 0.5% right now. And that is coming, down more than 0.5%. We're seeing them under pressure, not just Alphabet, but also AMD, putting some pressure on NASDAQ futures. We saw Alphabet's fourth quarter estimates failing to miss, or missing, falling short of what analysts had estimated, excuse me there. Though we are seeing a bit of a risk-off sentiment affecting the markets. Investors, though, appear to be shrugging off some of that, at least when it comes to the EM space. We mentioned that China is back online. Investors are still interpreting what this China-U.S. trade spat means, and yet we're seeing the EM index still marginally higher right now, and we're seeing some of the chip stocks actually giving the MSCI EM index a bit of a lift. U.S. Treasuries, little change right now in reaction to Trump's tariff rhetoric. If we take a look at the 10-year note, it's right now at 4.51%. Brent, on the other hand, down almost 0.5%. We're seeing, again, Trump and a lot of his rhetoric affecting what we're seeing in the oil markets. And I want to take a closer look at gold. I've been here in Cape Town at the Africa Mining Indaba all week, speaking to mining executives about gold prices. Yesterday, spoke to the CEO of Barrick Gold. His expectation is that gold prices will continue to increase, and we are seeing gold continue to reach record prices after a lot of haven demand by investors, considering a lot of the uncertainty out there in the markets right now. But let's check in on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio to give us a closer look at that. Avril, what are you watching?
Yeah, we've been watching China today, but I thought I'd show Japan some love as well. We did get wage data showing the growth by the most since 1997. If you look at real wages as well, positive for a second month. So pay rises keeping pace or catching up with inflation. And as you know, for the Bank of Japan, it wants to see this positive spiral where wage gains feed into inflation before it can continue taking its foot off the stimulus pedal. Suddenly, the data feeds the case for that. If you flip the board, you'll see that reaction in the Japanese currency today. That is the top gainer among Asia FX to the highest level against the greenback since the middle of December. And getting further fuel from 4 yen bulls was really these comments from the economic revitalization minister saying that he sees an inflationary situation in Japan, that there's no gap in the view between the BOJ and the government. So it looks like further green light for future rate hikes. And as I say, that fuel for yen bulls, this is what we're seeing in Japan on the currency and from the data today.
Thanks as always, Avril Hong in Singapore for us.
President Trump has proposed a U.S. takeover over the Gaza Strip and assuming responsibility for reconstructing the war-torn territory. The idea, made during a press conference with Israeli Prime Minister Benjamin Netanyahu, represents a dramatic new intervention in the Middle East. The U.S. president is also insisting Egypt and Jordan should take in Palestinians from the Gaza Strip. Some experts say the takeover plan might not be viable.
We don't know if it's a viable alternative. It certainly doesn't look like it right now. Look, there are many, many, many steps to be analyzed before this could be realized. But I do think it has to be taken seriously. If the president says it, I hope the chairman of the Joint Chiefs of Staff, the Secretary of Defense, and the military leaders will, give it a hard look and come back to the president and say, Mr. President, here's what it takes.
All right, joining us now to pick up the discussion is Rachel Ziemba, founder of Ziemba Insights. Rachel, so that was a really bombshell statement coming through from the U.S. president overnight. Even the Israeli Prime Minister Netanyahu seemed to be surprised at what came out of the president's mouth. How does yesterday's announcement shape up our understanding of what the U.S. administration wants to achieve in the Middle East region?
Well, I think it's hard to fully put the pieces together because I think this is another, maximalist shock, in a sense, annexation idea we're seeing floated by Trump, which is unlikely to come to fruition. But I think it does really highlight his desire to see the war over and to move on from this. But by announcing it in this way, he is talking about stripping people from their land. He's moving away from a two-state solution. And that, I think, makes it very difficult to continue with his other pledge of expanding the Abraham Accords and creating those networks between Israel and the GCC states. After the sort of devastation and war between Israel and Hamas and other actors of the last almost 2 years, I think it's hard. It would have been hard to do that anyways, but I think this makes it more difficult. And of course, we also saw him negotiating with himself about Iran. So he definitely wants to see no nuclear weapons, but I'm not sure that he has a plan to get there.
Okay, so let's talk about Iran, because also very important. He signed a directive yesterday to ramp up economic pressure on Iran, and that sort of moved down in terms of the news flow this morning because of the Gaza comments. But it appears as though what he wants to do is to cut off Iranian oil exports. How successful can they be? Can the administration be at doing that?
It depends how willing they are to inflict pain not only on Iran, but on the buyers of Iranian oil in China. It's notable to me that he issued a directive, but he didn't accompany it with new sanctions. And in a sense, a lot of these powers and reports he's asking for, they already exist. So he made the choice, yes, to say maximum pressure on Iran, to talk about cutting off Iran's oil supplies. But I think this might be a time-buying activity. I am still expecting sanctions on tankers and other entities involved in the trade, but I think it's very unlikely that he will be able to or want to zero out oil exports from Iran. We will likely see some oil coming offline, but probably much less extensive than he's threatening. He still seems to want a deal with Iran. But again, as we've seen in a variety of areas, it's not clear. He hasn't articulated what a good deal would look like.
Yeah, there was a lot of focus on the JMMC OPEC Plus meeting this week, just to see if they were going to respond at all to some of the, broadsides being directed at them from none other than the U.S. president. But they seem to be intent with continuing along their slated production schedule. Do you expect that to change at all? Is there any factor that could motivate OPEC Plus to bring barrels sooner to the market?
I think a real outage, anywhere in the world would be necessary. So that's where I'm watching what happens with Iran. I'm watching sanctions implementation and enforcement with Russia. If there are real outages, then we could see some OPEC members moving forward or at least sticking to their plans. But at this point, from OPEC's perspective, their goal is the long game. They do not want to end up in a situation where Russia comes, engages in a trade war, an oil-producing war with the OPEC bloc, as they did some years ago. I think they are waiting to see outages, and they would rather see, if there is oil coming offline, they would rather see clear signs from the U.S. about how much new production will be there and across the Americas. So I think slow and steady for any additions from OPEC, in my view.
Yeah. Rachel, always good to get your perspectives. Rachel Ziemba, founder of Ziemba Insights. Thank you. And thank you for staying up late also. Well, staying on those Trump comments on Gaza, let's go to Bloomberg's Honor Ant in Istanbul. We're getting a lot of reactions from countries around the region. Saudi Arabia putting out that statement very early in the morning, essentially condemning the decision-making out of the U.S. and saying that they would still like to see a viable path towards Palestinian statehood. But let me just ask you this. How realistic is this plan to begin with?
Well, President Trump's plan was, first of all, kept to a very close circle. Nobody was really aware that he was going to make this bombshell announcement yesterday, but which he did. And it's an extension of his earlier ideas, pledges, or suggestions to relocate about 2 million Palestinians currently in Gaza to neighboring countries, Jordan, Egypt, an idea that is not accepted by anyone, including the likely or proposed host countries in this question. What happened after yesterday's suggestion was that, as you said, there was a swift reaction out of Saudi Arabia, and we will very likely see very similar statements, rejections from countries across the board in the region, including the Palestinians themselves. President Trump and his administration has a long list of priorities in the Middle East that he is probably going to focus on when he travels here, as he already suggested. And some of those priorities are very important for his own domestic agenda, such as lower oil prices, which is going to be a function of whether or not OPEC countries and OPEC producers in the region really play ball with Trump. Now that long list of priorities has a new addition, which is this Trump idea about possibly relocating Gazans, Palestinians in Gaza to neighboring countries.
Yeah.
But we can say for sure that this idea is not going to be. It's going to be a very difficult proposition to make this a basis for negotiation with any country in the region, as is very apparent from the statement out of Saudi Arabia earlier this morning, Germana.
Yeah, very valid point. And we were just talking about OPEC as well with our prior guest. But I also want to turn to the meeting that took place between the Turkish President Erdogan and Syria's new leader, Ahmed. Yesterday, they met in Ankara. So that is also going on in parallel to the discussions around the future of the Gaza Strip. What were some of the key takeaways of that discussion there? Because, of course, there is that sort of a controversial northeastern part of Syria that is still being debated, and it's going to be interesting to see whether or not that community will actually go along with this transitional government.
Well, that's definitely the gist of the meeting yesterday. What happens in northeastern Syria and to the US-backed Kurdish rebels, which have been active there since the beginning of the Syrian civil war more than a decade ago. And as you said, it's really tied to the general Middle East question and possible plans by the new US administration to end the conflicts in the region. It's obvious from yesterday's meetings that both Erdogan and al-Sharaa agree on the need to come up with a joint plan to basically dismantle the Kurdish militant group operating there with support from the US. They said as much. It's not clear how exactly and when exactly they're going to move on this, but there is clearly a consensus between Syria's new government and the Turkish government to dismantle the so-called YPG in northeast Syria, Jumana.
Yeah, Bloomberg's Honor Ann, thank you very much for getting us up to speed on all the developments from Gaza to that meeting that took place between Ahmed al-Sharaa and President Erdogan. Well, while Honor was speaking, we just got a bit of breaking news coming through in the auto space. Really big story that we've been monitoring over the last couple of weeks. This is according to Japanese news sources, Nikkei, saying that Honda and Nissan are ending the merger talks. They will drop the integration plan. And remember, this was a huge story that we flagged about a month ago, talking about the potential integration of Honda's business into Nissan, but it seems as though the talks have fallen apart according to Japanese sources. And of course, the whole purpose of this was them to deal with some of the headwinds facing the business, in addition to the strong competition that is emerging from China on the electric vehicle front. So this would have been one way for them to counter the rise of China electric vehicles. But of course, there's another angle to it, and that was the Renault stake in Nissan. So this story just got at some latest developments suggesting that the talks between the two rival car makers have now actually been called off, per Nikkei. And coming up, Turkey's finance minister says he doesn't think his country will be subjected to President Trump's tariffs as the global trade war intensifies. Some of my interview with Mehmet Simsek next. This is Bloomberg. Welcome back. Well, the European earnings are coming thick and fast. We've just got some Santander news breaking. The earnings have just come through in the last couple of minutes. And just to give you some of the highlights there, the fourth quarter net income came in at 3.27 billion. That is higher than expectations of 2.93 billion. They have also said that they expect to spend 10 billion euros in buybacks over 2025 and 2026. The CET1 ratio fully loaded came at 12.8% versus 12.6%. But from what we can see here, there is a beat on the top line and an announcement on the share buybacks throughout 2025 and 2026. 10 billion euros is what we're getting. And of course, just a reminder, in the last couple of minutes as well, we just heard from Nikkei reporting, Japanese source reporting, that the talks between Honda and Nikkei have now been taken off. So those discussions are no longer proceeding. And on the back of that, we're seeing quite a big fall in Nissan shares, down 5%, falling as much as 5.3% on the news. So lots of breaking news coming through in the last couple of minutes. Now, as President Trump's global trade war intensifies, Turkey's finance minister says he does not think Ankara will be subjected to U.S. tariffs. I spoke with Mehmet Simsek at Bloomberg's Future of Finance event in Istanbul.
No one is immune to what is happening globally. And U.S. is an important global player, an important economy, is an important engine of global growth. So we take all these developments pretty seriously. When it comes to Turkey, first of all, we don't think we're going to be one of the target countries, simply because if you look at last 2 decades, U.S. has posted about cumulative. This is $80 billion of trade surplus vis-a-vis Turkey. When you add services, it's well over $100 billion surplus.
You're safe on the deficit list.
So we're not on the deficit list. That's number one. Number two, our exports to U.S. make up 0.4% of U.S. imports. So really nothing by global standards. And thirdly, we are already subject to high tariff status, meaning we're not treated preferentially by the United States. And therefore, we're unlikely to become a target economically. Politically, we've got some differences when it comes to some regional issues, but I don't think that would justify, trade restrictions. Speaking of, overall global protectionism or trade fragmentation, I can tell you that while Turkey is not immune, we are relatively more resilient. Let me explain just briefly. First of all, 62% of our exports go to countries that we have free trade agreements. So 62% is largely insulated. Number two, about 3/4 of our exports goes to immediate neighborhood, meaning European Union, Middle East, North Africa, and Central Asia, where we are close, meaning nearshoring, and where we have friends, meaning friendshoring. So it's 3/4 of our exports are insulated, roughly speaking. Finally, when you look at Turkish economy, domestic demand matters more than the exports. I mean, we are relatively not as open as some of the Asian or Eastern Central European counterparts. I mean, exports of goods to GDP is roughly about 20%. That doesn't really qualify us as, a meaningful source of vulnerability through exports. But we do want to boost exports because we think this is key to rebalancing long-term and achieving sustainable growth.
Is the weakness out of Europe going to be an issue?
It has been a major issue.
That was Turkey's Finance Minister Mehmet Simsek speaking to me in Istanbul yesterday.
Yeah, great interview there, Jumana. Let's turn, though, to the Bloomberg Big Take. De Beers, the world's most famous diamond company, is floundering. A global slump in demand is threatening to frustrate its owners' plans to sell what was once a titan of the industry. Now, crucially, there's little sign of recovery in China to pre-pandemic levels. Joining us now is Bloomberg's Ndiro Oganga, who has been following this story just a bit for us. So, Ndiro, talk to us about the slump in the diamond market and how it's affected De Beers. Yesterday, we were speaking to the CEO. He was sounding very optimistic, but maybe you can give us some insight into what this Big Take digs into.
Hi, Jen. So sales have been mad in a lot of tension following a crash in the market that has been crippling prices in the diamond market. If you look at De Beers, their prices are slightly above market value, and this has alienated their buyers and also infuriated them. In November of 2024, buyers landed in Gaborone and they realized that the prices of rough stones were 20% above what the market value was. And while De Beers budged a little in December and reduced prices by about 10 to 15%, it was still above secondary market prices. And if you look at these challenges, they speak to the greater challenges that the global market is currently grappling with. You have pressure from lab-grown diamonds that cost a fraction of what natural stones cost. And then you also have the slump in demand from China. It was the second largest market for diamonds. And ever since the pandemic, 50% of that demand has gone away. And on top of that now, De Beers has to contend with the fact that its parent company, Anglo American, wants to exit the market. They've told their investors that they want to focus on copper and iron ore mining. So while a quick exit is not going to be possible, De Beers is under very strict instructions to cut costs as much as possible.
Yeah, and Al Cook was saying they are on track for that, but still definitely facing a lot of pressure. And Ndiro, when we zoom in, though, to Botswana, we saw that Botswana and De Beers did come to some agreement. But how is the shift in the overall diamond market expected to affect the economy there in Botswana? Give us some insight.
In December, Bloomberg reported that their budget deficit was going to grow by about 1.4 billion, which is technically 6.7% of their GDP in the current financial year because of a slump in diamond receipts. And the newly elected President Duma Boko acknowledges that there's a problem because diamond accounts for 80% of the economy, yet it's unable to create jobs for their 2.5 million population. So they're looking to diversify into climate-smart agriculture, digital economy, expanding wildlife tourism, and also adding value to their minerals.
Bloomberg's Indira Oganga joining us in Kigali with some insight into the big take. Thanks so much, Indira.
Well, a lot of news throughout the course of this show, but I want to bring you some breaking news out of Japan. This is according to the Nikkei. Japanese sources that Honda and Nissan, the two automakers, have dropped their integration plan. They have ended their merger talks. And so this is the respective reactions. Honda stock is rallying on the news, up 7.5%, and Nissan stocks are down almost 5%. And remember, this was a proposal that was put forward to help turn around the fortunes of Nissan, to counter some of the competition coming through from China in the electric vehicle space. And, of course, a lot of questions about that alliance with Renault as well in France. So this is the latest news that is coming through, and that is the reaction on both of those stocks, as it looks as though those merger talks are coming to an end. But that caps it for Horizons Middle East and Africa. We went through a lot today, including those bombshell announcements from President Trump yesterday vis-a-vis the Gaza Strip. Thank you for watching the show. I'm Joanna Bersetchi in Dubai with Jennifer Zabazaja in Cape Town. Stay with us for Daybreak Europe. This is Bloomberg.